Hello everyone, this is Imi from iTradeAIMS.net, AIMS Stress-Free Trading. Thank you very much for coming back to the channel, and today we are going to talk about the dragon. Not the dragon from the Game of Thrones, but the dragon of the Forex market. If you don't know it, it's GBP JPY. So it's a combination of two highly volatile pairs, the pound and the yen. It moves a lot. The story is a setup within a setup within a setup. A wave within a wave within a wave. That is fractal geometry. Everyone knows now, I hope by now, that the markets moves in waves. And every wave inside has a wave. Now, the 5th of May identified a setup 1. This is the 3, this is the peak down, then the gate of sleep, and then it's inside the box and the purple is correct. You take a trade. So when did I take this trade? Well, I took this trade. I do 2 scans on the hourly chart. Basically, the hourly chart is my way of swing trading. So around about 9 p.m. UK or 10 p.m. 10 p.m. is the best because that's when the markets close. But then sometimes it could be too late as well because you have to do other routines and then sleep and wake up 6 o'clock in the morning as well. But anyway, so by that time the market had proven itself. This is another way of looking at it, that the market closed, the price closed outside the box, and then it kind of retested it here. We took a short. Here we go. So the trade was taken there, and because the market was around here, you don't want to take all the way. It would be all right if you took 70 pips stop loss. But over the years, we have learned that you can minimize that. So I took a risk of 30. Now imagine that, 30, and the target was 120. Why did I choose this? Very simple answer. I hope the button is, yeah, it's there. Web expansion, start from where you think is the start of wave 3 and pull this leg to where you think is the peak of wave 4, and that will give you target zone 1, and you put your stop loss or target point just above that, and then forget about it. If you have a VPS, by the way, that's a very good way of doing it, because you can run this, and if you have a trade management script like ATM from 4-EXE, Steve's ATM, the one that I use, really nice, and you can just forget about it and it will manage your trade. Now we take a lot of these trades like this. It's the same trade. Let me tell you one more about while we're talking about this, and I'm going to come back to this. Today I missed this one. Well, because unexpectedly the weather in UK is really nice today. It's scorching hot, 21 degrees. I know for some of you it might be a laugh, but that's hot for us here. Really nice. Had my 7-minute workout with my son. Played some cricket and jumping up and down in trampoline we did. Fixed their bikes. And meanwhile, I missed this. I was looking at this trade since yesterday. So yesterday was the pullback. And then before going to bed, I saw this. And I thought, okay, maybe by the time I wake up, it might be gone. Or maybe it's not. But then I forgot to check it this morning. I don't know what happened. Because I think I was too involved with the DAX. And that is what could happen if you're trading the M1 chart. But anyway, this was a perfect setup. I don't think I will take this all the way to target zone 1 because of, let's go to the H4, and you can see 1, 2, 3, 4, 5 kind of thing has happened. So I probably, if I took it, my plan would have been to, yeah, it would have hit my target point by now. So entry would be here, stop loss would be here, and that's around 15 or 16. So around 1.5 R would do. If not, then you would draw your target zone like so. Oh, this is perfect, 50% pullback. And then your target point will be there. So can you see the target point comes only like 3.7 points higher than this, and markets usually react to those highs. So that would reduce the chances not much, but reduce them a little bit of chances of 2 point, target point hit. And if it goes above this, then chances are it might go even more than that. So here you either want to then put 1.5 R, or you want to just put your target point up there then, somewhere in the middle, so you can target 3 Rs or 4 Rs. So that would be better option. And then you manage it the way you want. So what was the story of the wave within wave within wave? Now, this is the story. So we looked at the pound yen, right? It was moving. Now, here I'd like to share a concept. The Forex market is like an interconnected web. When something moves, the rest of the market kind of moves there, but it's rarely that all the market moves at the same time. So there's a concept of hot pair, or let's call it the pair in play. Let's put it that way. Like the Mark Bellafiore of SMB would put it, the guy who wrote that lovely book, the Playbook. Yeah. So yesterday the pounds were moving, and so were the yens. Right? So when the pounds are moving and the yens are moving, the effect was double. And we ended up doing this. So I was in this trade already, right? So you don't have to touch that. But other members who trade the M15 chart, they saw this as they woke up. They see, oh, there's a 3, there's a 4. This market is in wave 5. They would look at it and think, okay, can we actually go and find out if we can trade this? So if I was not in this trade, I had a cherry right at the London Open, not at London Open, actually at 1 hour into London Open, because as soon as the first hour of the London Open were closed, you would have this cherry, and the cherry would have given me a 32 pips, not 32 pips, a 20 pips. So let's say probably 25 pips stop loss. Well, let's call it 30, and you would get your 60 here. So even if I didn't take this, I could still have taken this, and guess what? You could have still made the 2 Rs on this, right? Well, this one was more. This was 4 Rs, right? But this one was 2 R. You could have made it easily. If you don't trade the H1 chart and you traded the M15 chart, then this is your setup 1. So this is what I'm talking about. Setup within a setup within a setup, wave within a wave within a wave. So on the M15, you again have a beautiful setup 1, requires a 30 pip stop loss, and you take your 60 pips here, 2R. Now imagine if you missed this as well. Worry not, because we have M5 for you. Once again, you have a beautiful setup 1. So this is a nice strong wave 3. Now, check this out. Both the H1 and the M15 trader has taken their profit, and yet you still have another chance. So here, you take your trade, you have probably 15, 16 pip target point. There you go, 30, 32, you hit your 2R. Now I'm going to put a box around this. So that's my trade on the M5. I'm going to go to the M15. That's my trade on the M15. Let's go to the H1. That's my trade on the H1. Can you see? I took the H1 trade. If not, I took the M15 trade. If not, I took the M5 trade. This is 3 levels. That's the magic that happened. And let me bring some charts from members who actually traded this. So I'm going to go to their journals. Here we are. This is Vicky's journal. She took the M15 trade. She's humble, but she's very successful trader. I mean, if you know a little bit about markets and stuff, you know that a lot of people actually lose money. This lady is not impressed with herself, but she should be. is 37.8 are up, and she's never lost her account because she just trades the setup one and this method. Anyway, let's go to this chart, and you can see that she has taken a beautiful setup one on the M15, and then trailed candles. Well, if she didn't trail candles, it would have hit her target point anyway. And when she got out, this was the setup going on for the M5 chart. Now, I didn't take the M5 chart, but I did this. Let's go to the M5 chart of the pound. Now, I didn't much like the pound dollar setup, but I took the pound yen, so that means I've traded the pound, and that does the trick. So if I took a trade on this as well, then what I would do is that I would split my risk between the two. I won't take a 1% trade on this and 1% trade on pound yen. No, I'll have to split it then. Anyway, I just went in with the normal risk on the other one. So let's go to, if you look at this chart over here, so this was my cherry signal. If I didn't take a setup one here, I would take my cherry 1 hour into the London Open, and I would have my 60 target point because stop loss is 30, hit on this again. Then it gave me another chance of another cherry, but at the same time I could have gone to the M15 and traded this cherry or this setup one, but I went to the M5. Let's go to yesterday's chart. Now, when I looked at the M5, I saw the Apple setup. Now, I don't know if you know setup Apple, probably you don't, because this is like the last entry method you learn as you progress through the 3 stages of training that we do in AIMS. So I saw this and I thought, okay, so I missed my first entry, but I have my add-on entry available. So I made my first entry as my add-on, and the second entry was on a perfect setup one. And then I just trailed candles over here and exited. So this was another trade that I took, and this is a wave within a wave, and if you can see, there's another cherry here. Now, surprise, surprise, would there be an M1 setup down there? Let's go to the M1 and find out. Yep, there is a setup one, and I think I took it and then messed it up. Looks like I took it and then got out straight away. Something must have gone wrong. I do not remember what, but it was a fantastic trading day. Meanwhile, we also went through some M1 trades yesterday on the DAX. They were a lot of fun. Okay, what else happened yesterday? I'm going to go and check. Oh, you see this one, the dollar CAD. Now, this is what we call a setup zero because purple is mingled with the Gator. And when you have too many trades running or you are profitable, there's this other problem of satiation as well. It's okay. I wasn't really motivated, but when this candle happened, then I wasn't really happy. Yeah, I expressed myself in the chat room. Oh yes, I messed up this. Well, I can't call it messed up because if you look at the trade here before, you know, on the left side, it's not really impressive. It's not really pretty. So I wasn't really proud of this. And I trailed the box. It got me out. No problem. Oh, I think the stinker was CAD yen. So let's go forward. Oh, the Kiwi. Yes. The Kiwi has an interesting thing. So this is what we call the Walt setup or the H1M5. It was a bit late during the day, but I was watching it and I was enjoying it. I had plenty of profit already. I went to the M5 chart based on that. So I wouldn't be sitting on the M5. I'd be on the H1, and that's where I would see it. Because if I'm on the M5, then I will have to check chart throughout the day. That's going to be very tiring and not fun. Anyway, so here we go. If you know what a setup one is, this is how you would see it. 3 and 4, tight box, purple correct, bang. Went in, took 1 hour, just for the sake of it. It was a lot of fun. What else happened? Let me find that CAD yen trade. So sometimes you get kicked out and then it continues. Yeah, there we go. Now I would give myself a DS0 simply because I could have just stayed a little bit more patient. It's one of those, it's gray area. If I want, I can say no, it's a DS1. I have not broken my discipline because I exited on 2 exit signals, which is, one is the black dot. You probably don't see it properly, but you can see that the candle has closed above the green line, and then it's closed above the red line as well. It's 2 exits, and then the third exit would have been stop loss up there. With the benefit of hindsight and the beauty that you can see a beautiful wave 3 and 4, I should have left my stop loss here. See this line? Yeah, and it would have been just 17. And as soon as I got out, in fact, by the time I got out, it was already on the way down. It would have hit my target point here straight away. How did I put that target point? Again, it's this. Here we go. Target zone 1. Put target point slightly above it. Meanwhile, I was asleep during all this time, and around this time I didn't have to look at the chart either. ATM would have done its job. At 1 hour over here, it would move stop loss to break even, and then it would have hit target point. It's very, very simple, and not a hands-on but a hands-off experience. You literally set and forget. Before going to bed in UK time, let's say 10 o'clock or 5 p.m. US, or yeah, around that time, you check your charts, set your orders, go away. Otherwise, if you're in Australia around evening time, you would have the London Open, then you can check it here. So suppose you didn't take that one, you could still have taken this trade with a 30 stop loss and targeted this target zone 1 or trailed the box. I can see an M5, a H1 M5 going here as well. Let me go through that. Yep, there was a little setup on the M5 as well if you wanted. And so yeah, this is a really beautiful pattern, the setup one, because you can see it on multiple time frames. So ideally we target these impulse waves like this one. So I can take it from the H1, then I can take it, let me refresh this chart. So let's go to the hourly. So this is my first setup one. Let me take it there. This is how I would see it, a 3 and a 4. Now it's a bit iffy because you have this strong up here and down, but generally I could see that the pound was moving. Well, anyway, I took the trade. Around here I didn't know if the pound was moving, sorry, I apologize for that. I took the setup one based on the setup one, and then but around here at London Open it was clear that pounds are moving. All you had to do was take this cherry. If you don't trade the H1, drop to M15 like you saw Wiki's trade. Wiki would have seen the chart like this, 3 and a 4. You trade here, bang, you get 55 pips, and you could have done that on 15 stop loss, or if you were conservative, 25 stop loss. And then if you still interested, you went down and did it on the M5, which was around here. So the M5 also gave you a setup one, and of course there were setups on the M1 as well. So on the H1, M30, M15, M5, when the market is moving, you'll find setups on all of these. And if you want to learn more, go to itradeaims.net or download the 10-second Elliott Wave first. The link is in the description. You're gonna love that book because this is what introduces because it introduces you to this, the core concept of the 10-second of Elliott Wave. That's where it is. I hope you like this video. If you do, please hit the like button and subscribe to the channel so that when there's a new video, you will know that I have uploaded another one. And also note that I've decided that I'm going to upload a video every Tuesday and Friday, so look out for it. See you later.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell icon so that you never miss any future videos. See you next time.